I'm really interested by one of the points that you put in your notes, because I guess one of the triggers for today's selling is the thought that rates are going to go higher and that liquidity is going to be pulled out of the market over the year ahead. You, in fact, don't think that much liquidity is going to get pulled out of the market?
No, I don't. I think you're going to see a lot of liquidity in the market going forward. And that's not only because of what's happening at the Fed level, but you must remember, it's a big world. There's a lot of liquidity. A lot of other currencies have been issued around the world because of COVID. And the increase in currency in the markets is tremendous. Then you have to add all of the cryptocurrencies that are making people feel rich. So all of these elements tell me that the market is still going to have lots of liquidity, despite what the Fed may do.
So if today's selling is down to fears from investors that the Fed is going to tighten a bit quicker than previously expected following those Fed minutes, is that a buying opportunity?
Of course, for good stocks. By the way, I have to emphasize, with higher interest rates, those companies that are losing money, particularly in the tech sector, and by the way, one of the reasons why the tech market is down is because there are lots of companies that have not been making any money. Those companies are going to get hit very, very badly. And of course, those that are making money will do well. So you're going to have to differentiate very carefully between the companies that are really having a high return on capital and those that are not.
So are you saying, like the FANG names, the mega cap technology names that are profitable and that do see strong growth are good buys right now?
Exactly. Those that have been hit as a result of the overall decline in tech stocks that are making money, have a good return on capital, are growing. Definitely, these are great buys right now.
Let's talk, Mark, about a broader area of expertise of yours and China in particular. Do you think this could be an added challenge for investors this year if China does have a bit more of a slowdown, or if it doesn't, in fact, come out of its self-imposed zero-tolerance crackdown on COVID at the moment?
I think what's happening in China is really very positive for the long term, because what the Chinese authorities are doing are now trying to create a level playing field. They are increasing the regulatory supervision of the market generally and companies throughout the country. And that's a very good thing for investors, not only local but foreign investors. I think China warrants continued views. We have, of course, been in China. We're bigger in India and Taiwan, but China still is going to be a good place to invest going forward.